Hi guys, yeah, welcome back to my YouTube channel. So I want to emphasize on the need uh, uh, of understanding market structure because I've seen that a lot of traders these days just go to the internet and you know you are checking ICT concepts and you are checking SMC and this and that, but you don't really understand market structure. You know what FVG is, fair value gap. You know what induction is. You know what mitigation is, but you don't still understand market structure. Like you don't understand that the market moves in patterns. It moves. It doesn't. The market doesn't move in a straight line. It's either giving you higher highs and higher lows, higher highs and higher lows, or lower highs and lower lows, lower highs and lower lows. So if you cannot understand this simple logic, everything you are learning from YouTube or every course you are buying from those pros is just going to be giving you a headache because all those concepts, those SMC, those stuff, yeah, they are valid to some extent, but they are still following market structure. That's what they are doing. That's what you don't know. So if you are on you know a daily time frame, a weekly time frame, a 4 hour time frame, you need to be able to identify market structure. What's the market currently doing? Okay, you need to be able to tell the difference between a trending market, a ranging market, and a choppy market, a market that's actually not good. A market that's just choppy, maybe due to news effect. It's choppy and not really ideal to be placing trades. You need to be able to identify this. If you cannot identify these types of markets, if you like watch all all the YouTube videos about trading concepts, all these ICT concepts, you are still not going to. That's why you find that you see a lot of traders. Some traders will focus on trading only FVG. You cannot trade only FVG. FVG alone cannot be used as a strategy. So you know, firstly, I'll talk about identifying trading markets. When you see higher highs and higher lows, higher highs and higher lows, that's a trading market. If you can tell that this is creating a higher high and higher low, then that's a trading market. So, for example, what we have here is somewhat like a ranging market now because the market is now giving us. If you open the weekly time frame, the weekly time frame is going to tell you some things that you cannot see on the daily time frame. For example, yeah. So if we come here and so the market is currently ranging on the daily time, on the weekly time frame, obviously. So as you can see, it's creating higher highs, higher lows, higher highs, higher lows. It's actually trending. It's still an uptrend, but in a corrective form. So if you open this on the daily time frame, what you are going to be seeing is some sort of a range. And if I have to load it up, what you are going to see. So it's important that you cannot just look at it. Now some people will look at it from the weekly time frame and say, oh no, it's actually buying. We can just go in and just go in like that. So but if you look at it properly, you can see that the impulse of this trend is actually starting to turn into a range. So you need to be able to identify this, and this is something we call the an area where you can have sudden return in price or sudden change in price. Now if you know this popular pattern, for those, a lot of newbies know these popular patterns. This pattern, the head and shoulder pattern, it's actually something that those are our basic patterns then when we started trading. But if you look at this now, this is why it's very important to be able to identify when the impulse is slowing down, because what it tells you is the big banks, the you know the major traders, those guys are slowing down on their positions or closing in on their positions. So you know this same thing that looks like a trend can just easily turn into an head and shoulder pattern right now and start and change its direction and start dropping. So it's very important that you can tell the difference between a trending market, a ranging market, and you can also identify when the market is approaching a point of rejection or redirection. So yeah, so higher highs, higher lows, fine, that's a trend. But until a break of structure, until a break above structure, that is above the recent high or above the recent low, you cannot confirm that the trend is still intact until this price comes here and break the structure. And when I mean break the structure, it breaks the structure with a full candle, and the next candle still continued above it. That's when you can confirm that okay, now change structure continues. Then you can now wait for a retracement back to this downside. Now if you are waiting for that retracement, the retracement can occur at anywhere around there. Probably, if you are someone that uses FVG or other blocks, the retracement can occur around there, and you definitely have an impulse because the break above the structure signals that the demand is strong around this level. The buy orders from the banks are still solid around here, so it's a solid demand area. So if you are making your purchase around here, it tells you that the price is going to actually push through, even if it's not going to get above this area of this trend line, this break of structure area. If it's not going to go above it again, it's definitely going to push through. And probably when you now start seeing something like a double top, then you can now say, oh, if it creates a double top and starts dropping or gives rejection patterns, you have to use different clues. You have trading is broad, you have different tools, different patterns, different channels, and you have to use them differently. Now in areas like this, you can use rejection points. When you see like a solid pin bar on daily time frame, it tells you something. It tells you, the higher the time frame, the more solid and confirming that rejection pattern is. So if you see a pin bar or an engulfing bar, or you see some sort of like a pattern, maybe like a channel creating around 4-hour time frame, and it breaks below the channel and it changes structure. Those are signs that okay, now your head and your double top pattern is telling you that there's a possible rejection here and price could drop. Another thing you can look out for, when you see when you are trying to find out, when you're trying to see if the trend is going to change, is the candlesticks itself, how they are forming. If you have an initial drop from this area with maybe like a very long candlestick, something like this, like we see here on the weekly time frame, it indicates that the big banks, the big players are closing in on their positions, and they have bigger money. So it's more like trading. It's more like how BTC drops or Solana drops at times. Whenever BTC is making those big moves, you can see that sometimes just one single candlestick keeps falling on the 4-hour time frame, and you're like, only one candlestick has been falling for so long. You understand? So what that tells you is those big guys that have a lot of money are pulling out their money, and their big money is what make the market capital. So if they are pulling out, let's say the market capital is, for example, 6.6 trillion, just for example, that's not it, but let's say the market capital is 6.6 trillion. If they are pulling out 4 trillion out of that 6.6 trillion, expect a very significant change on that that particular market. Expect the candle to reflect in such a very um, in such a very liquid, such a very volatile move. So you need to look out for these things. So when you see something like that, it also tells you that okay, big players are moving out. And then when you see your confirmation or you see patterns and you confirm with double tops, this is how you make confluence. So I'll hold just, and I'm not talking about identifying trend, but I wanted to use that as an intro. So I would urge us to pay attention to these things and try to build on our confluence. It's not about FVG and ICT and this. They are valid, but understand the concepts. Yeah. Thank you very much.